Good day, everyone. You're welcome to this week's Business and Investment Tips Program, a production of RCCG Christ Church Radio with Ayodeji Ebo, an investment professional. This week, the focus is on the review of half-year 2023 financial performance of select companies. The financial performance shows how well a firm can use assets from its core business to generate revenue and profits. It is imperative for investors to monitor the financial performance of a company to make informed decisions about whether to hold, sell, or buy more shares of the company. The half-year result captures a company's performance for 2 quarters or 6 months. Hence, we are reviewing January to June 2023. Year-on-year means comparing the period this year to the corresponding period in the past year. For instance, first half 2023 versus first half 2022. Some of the select sectors we'll be reviewing include 1. Telecommunications sector. The telecommunications sector recorded a growth of 11.7% year-on-year in Q1 2023, sustained its positive form across 2 quoted companies on the NGX, MTN Nigeria and Airtel Africa, as the number of active mobile and data subscribers increased in the first half of 2023. However, both companies were impacted by the devaluation of the naira due to the liberalization of the investors and exporters window. MTN's first half 2023 audited revenue grew by 22% year-on-year to 1.2 trillion naira. However, PAT, profit after tax, dipped by 29% year-on-year to 182 billion naira due to FX revaluation loss of 221 billion naira. MTNN declared an interim dividend of 5 naira 60 kobo for the first half of 2023. Similarly, Airtel Africa's 3 months 2023 unaudited April to June revenue grew by 10% year-on-year to $1.4 billion in first half 2023. However, it recorded a loss of $151 million due to the FX loss of $471 million in finance costs. We expect a sustained growth rate to persist in this sector in 2023, driven by revenue from data and fintech. 2. Agriculture sector. The 2 listed companies on the Nigerian exchange reported mixed earnings. Presco's unaudited first half 2023 revenue rose by 15% year-on-year in first half 2023, majorly from sales of crude and refined products. The rise can further be attributed to increased domestic patronage due to FX challenges which restricted imports. Similarly, PAT improved by 12% year-on-year to 15 billion naira. However, Okomu's revenue, 85% from oil palm and 15% from rubber, dipped slightly by 0.2% to 41 billion naira, while PAT declined by 4% to 16 billion naira, attributed to an FX loss of 702 million naira. 3. Oil and gas sector. Revenue grew stronger year-on-year across companies in the oil and gas sector. Seplat revenue grew by 27% year-on-year to 278 billion naira, while PAT dipped by 50% to 44 billion naira due to the remeasurement of the crude oil production surplus of 30.2 billion naira. The company declared an interim dividend of 3 cents with a qualification and payment date of 17th of August and 30th of August 2023. Corn oil, 97% from white products and 3% from lubricants. Etana and MRS, 96% from white products and 4% from lubricants, grew revenue by 55%, 21% and 40% year-on-year to 87 billion naira, 69 billion naira and 60 billion naira respectively. Similarly, corn oil and MRS, PAT improved significantly by 245% and 558% year-on-year in the first half of 2023 to 6.3 billion naira and 2.3 billion naira respectively. However, Etana recorded a loss of 5.9 billion naira due to FX loss of 9.8 billion naira. 4. Cement sector. Revenue advanced across cement sector players due to sustained product demand. Dangote Cement, Lafarge launched Eco-Label cement brand, and Bois Cement increased revenue by 18%, 6% and 17% year-on-year to 808 billion naira, 197 billion naira, and 221 billion naira respectively in the first half of 2023. However, PAT slowed down due to the impact of exchange rate devaluation, which affected their finance costs. Subsequently, Dangote and Boa Cement's PAT both rose by 4% to 179 billion naira and 64 billion naira respectively, while Lafarge dipped by 5% to 35 billion naira in the first half of 2023. 5. Healthcare and pharmaceutical sector. The performance in the sector was mixed. GlaxoSmithKline Nigeria exiting its Nigeria business and Nemeth Pharmaceutical Nigeria accounts for 92%, while the balance of 8% is from Ghana. Both dipped by 48% and 41% to 8 billion naira and 1 billion naira respectively in the first half of 2023. Similarly, GlaxoSmithKline Nigeria PAT declined to 33 million naira, while Nemeth recorded a loss of 45 million naira. On the other hand, Fitsin Ethical Products 61% and OTC Drugs 31%, and May & Baker 99% revenue from production and sale of human pharmaceuticals and vaccines grew revenue by 26% and 30% year-on-year to 26 billion naira and 9 billion naira respectively. PAT improved by 3% and 39% to 3 billion naira and 68 million naira respectively. 6. Consumer goods sector. The fast-moving consumer goods sector recorded mixed performance despite the inelastic demand for their products. When consumers' demand for a product does not significantly change despite an increase in price due to inflation. Nestle recorded revenue growth of 18% year-on-year in first half 2023. However, it recorded a massive loss of 50 billion naira due to FX loss of 123 billion naira. As a result, its shareholders' funds were eroded to the negative of 49 billion naira. Also, Dangote Sugar posted a 9% year-on-year growth in revenue to 23 billion naira, while PAT nosedived to a loss of 28 billion naira due to 83 billion naira FX revaluation loss. However, Boa Foods, sugar fortified and non-fortified 60%, bakery flour 23%, and pasta 11.5%, and Nascon North sales accounts for 71% and West 22%, posted revenue growth of 90% and 52% year-on-year in the first half of 2023 to 321 billion naira and 38 billion naira respectively. PAT jumped 142% and 287% to 95 billion naira and 6 billion naira respectively in the first half of 2023. We anticipate sustained demand despite the high inflation rate that has negatively impacted the purchasing power of consumers' wallets due to inelasticity of their products. Remember that investment in stocks may not guarantee capital preservation, but it can offer a higher return than fixed income. You can allocate a portion of your portfolio to stocks based on your risk appetite and age. Thank you for listening. Please join us same time next week for another exciting and interesting session. For comments and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 07082463747. Stay blessed.